YouTube was good. I'm back with another video. Day 3. I'm coming back to back with it. I'm building that consistency, man. Y'all be proud of me. Drop some W's in the comments. Matter of fact, for that, go ahead and just subscribe right now. I know you want to. Your finger hovering over that button. Just go ahead and click it. I'll wait. Matter of fact, hit that like button while you're down there too. And if you're feeling journeyous, go ahead and throw a little comment for your boy. You know what I'm saying? W's in the chat. W consistency. We trying to get right with this stuff. You know what I'm saying? But yeah. Now we're going to get down to business. So today is February 12th, 2026. It's Thursday. Not really surprised by the price action that we had today. I actually did not catch any of this sell, but I'm going to explain how you could have anticipated this, as well as the entries you could have got, and maybe point some things that you may have missed when you were trading this morning initially. So this whole week, we've just been bouncing between the same two daily voids that I've been pointing out in my last 3 videos. We have the one from February 3rd sitting up here, and then the one from February 6th sitting down here. Overnight, after price had tapped into our original TP, which is right here, you can see how price began to run up again, just like how I did the last couple of days. Ran right back up into the same price action. Ran right back up into the same void from last time. One of the first things you want to do when you get on your chart is, again, mark your midnight open and your 8:30 open, especially when you have news that opens at 8:30. Reason being is because this is going to help us determine or start to build a idea if price is going to be bullish or bearish for the day. So if price had already came back down from our previous daily void, took out sell side liquidity, and then reversed all the way back up into our daily void, we can obviously expect that price is going to have some type of reaction from here. But what type of reaction? Because price is above the midnight open and the 8:30 open, price is still in a deep premium, meaning there is a higher chance that price is going to want to sell off. So now that we're starting to build that bias, we have to find a target. Nobody hops in a car. Well, you really shouldn't hop in the car with somebody and you don't know where they're going, because I don't really know what to tell you. You definitely going to end up in a situation if you don't know where you're headed. It's the same thing when you're trading, right? You want to be able to find areas in the market that price is going to target. So again, 2 things that price is going to target: liquidity and imbalance. So now that we understand that we are in a deep premium, we want to be able to understand the range that we are currently in. So again, I'm going to recommend to pause the video right here and be able to find the current dealing range that price was in right before 9:30. If you pause the video and you mark up your range, it should look like this, right? So the range that we're currently in is going to be from this lowest low all the way up to this highest high. I just have 50% marked up so that you guys can understand where equilibrium is. So just to recap from the other day, anything 50% or above is considered a premium. Anything 50% and below is considered a discount. So if I'm anticipating bearish movement, what areas should I be looking to find some type of imbalance or liquidity for price to target? Discount, right? Because if I'm already in a premium and I'm expecting it to sell off, it's looking for lower prices. Now again, I'm gonna give you guys a second opportunity. Find something within this given range, right? This given range that we're currently in, that is below 50%, that is either liquidity or imbalance. I'm gonna give you guys a chance to pause the video and find it for yourself. Okay, so if you said these relative equal lows right here, then you're correct. So notice how these relative equal lows were sitting right here below 50%. This means that we have a high probable target of where price is most likely going to be drawn to before doing whatever it wants to do next, right? So now that we understand the range that we're currently in, as well as a highly probable target that price is looking to hit, all we have to do is find our entry model so that we can get in this trade down to our sell side liquidity or take profit at 25,200. Moving down to the 1 minute time frame, you can see how when price first opened up, it was very choppy, right? So this is the 9:30 open right here, this long candle, or this candle right here with this long wick. Notice how it was pretty choppy in the very beginning, but it took out these relative equal highs right above here. After liquidity was taken out, what did it end up doing? It reversed, right? But this isn't good enough for us to just hop in a trade. We need to be able to understand where we're going to actually get in. So now that step 1, we have buy side liquidity taken out. The next step is to identify a market shift and then some type of PD array that we can insert for a sell. People who are familiar with ICT's model 22, you see where this is going. So here again, you can see price took out these relative equal highs over this buy side liquidity, sold off, had this market shift right here, and then let this fair value gap. What did price do? Immediately returned into it and then sold off into our target. So this right here could have been your entry model for the day. This is showing that you don't always have to get sniper entries. You can wait for price to show its hand and still be able to get a decent run for the day. So if you would have entered in right here and took profit where we originally anticipated, this right here is around, let's say 25,325 all the way down to 25,200. That's over 125 points just off this move alone. That is more than enough to pay a bill, to take your girl out for Valentine's Day this weekend, get some new brakes on your car, shoot, buy a new game for your PlayStation. You know what I'm saying? So just think about all the little things that this can do. That's why I'm trying to show you guys we don't have to overcomplicate it or get FOMO whenever we're trading, because this stuff happens all the time. The cool thing about this market, even if you were to miss this original FVG entry, price is going to give you another opportunity to enter into the trade. Here you can see how price used this up close candle as an order block to send it lower. So if you would have missed this entry, you could have used here. It gave you 1 opportunity, 2 opportunities, 3 opportunities to get into this trade right here and still run down to our anticipated target. So let's just say you would have got in here at the low. We'll just call this 275. So 25,275 all the way down to 25,200. That's still 75 points. That's enough for gas, groceries, maybe buy you some VC for Fortnite, get your hair cut, give your girl money for her nails, buy her some flowers. Fellas, I hope y'all buying your girls flowers this weekend. It's okay to do something nice for your girl now that you touching a little bit of money on, you know what I'm saying? So we get blessed to bless others, you feel me? I'm just being stupid, but y'all get the point. I'm basically showing you how you don't have to catch these super sniper crazy entries in order to be profitable, especially if you're on a funded account. 75 points is more than enough to either pass your combine. It's definitely more than enough for a profitable day in the market, so you don't have to really do too much. Now let's just say like, hey, I'm not really a 15-second trader, or my chart doesn't give me the option to pull up 15 seconds. You still could have had this same entry even on the 1 minute time frame. So one thing I want you to notice, buy side liquidity taken out here. You can see obviously where our market shift is. Even if you guys did not get a FVG entry, like there was a small one right here, but I'll be honest, I don't think I would have caught this. You could have had this 1 minute order block right here. So notice how price respected this up close candle, right? 1, 2, 3, even 4 opportunities where you could have got your entry just for it to even rotate lower down to your profit target. So the reason why this right here would have still been a great entry is because if you can see here, this is our equilibrium from our range previously, all the way from the high down to yesterday's low. We're still above 50%, right? Whenever you are bearish, it is super, super, super efficient for you to get your entry above 50% of your range. By doing that, you're minimizing your risk and you're maximizing your profits. Same thing on the flip side. If you're bullish, it's best that you get your buy entry somewhere 50% or lower, because again, you're going to maximize your profit while minimizing risk. That's how I'm able to catch these big expansion moves and make good money off of it without having to over leverage. This is very key, especially for somebody who trades a funded account. I'm really giving you guys the formula to be successful in any type of trading environment, especially a funded environment. Think about it. If you are able to blend, number 1, good risk management, which is a form of discipline, patience, being able to wait for your entry in the premium or discount, depending if you're bullish or bearish, as well as getting good at finding the liquidity or imbalance to target in the opposing side of the range, you will have long-term success in your day trading. Once you carry those same habits over to your own personal live account, you're going to see new tiers that you're going to hit, because instead of having to wait 5 days to only pull out 50% of your earnings, all the cheddar that you just made goes straight to you. There's no middleman. You don't have to worry about them changing the rules. You don't have to worry about X amount of days to receive your money. All that goes to you, and that's the goal. I always tell people you should use prop firms to fund your own personal live account that is regulated, because you're not going to have to deal with new rules, new changes, any type of new factor that's just going to throw you off your edge. Find a system that works for you and utilize it. Here are my stats for my 100K funded account. A little bit shy of 8,000 for the week. You can see here up top, they already removed the funds that I asked to withdraw. So I took my 50%. Just shy of 4,000. I only made like a few bucks right here in the Asian session just so I can make it even 4K. I have my personal daily profit target set at right above 3,000, just so that that's something very consistent I can do. Try not to do too much or overtrade. Sometimes I can have a habit of just doing too much when I've already won. So it's just no reason to do that. Yeah, man, that's really it. I'm going to roll the footage of me requesting that payout, and then I'm going to catch y'all in the next video.